What's going on, YouTube? Today is number 14 of the $1,000 account challenge, and today we are up $80 in the account, or 4.97% of the total portfolio balance. Now, if you don't know, my name is Gates. I'm taking $1,000 in day trading options to see how far we can grow this account. We started with 1,000. We are at now up to almost 1.7K, meaning we've made about 70% of our initial investment back in 14 trading days, which is mind-blowing, right? Phenomenal. What I'm doing is I'm strictly day trading my watch list, following my watch list trading rules, my strategy that I've laid out for myself. Now, there are times where I do break the rules every now and then, and I always will explain those. So today, I did not break my rules. However, I used a variation of my rules to take an entry on MU, not long, but short below the long trigger. So I'm going to explain what happened today. Straight off the day trade watch list, MU was a long idea. It was a side chart for me, but long idea above $85 or the pre-market high. So the pre-market high was right here at $85. This is a post-earnings trade idea that gapped up. And I'll be honest with you, initially I was looking for a continuation, right? I wanted to see this press higher. So moving to the 1 minute time frame, we do get an opening rally that moves up above 85 all the way to $86, and then a heavy sell-off. So when I saw this press up above the long trigger and run $1, I'm like, MU, let's load the contracts, let's go long on this thing, right? I'm going to wait for a dip entry. We don't get we get a dip, but it's not something that's holding the trigger level, so I'm not going to take the entry. Plus, it was within those first 5 minutes. I like to not trade in those first 5 minutes because of reversals like this. So we get a break back below $85 right here, and the stock just could not reclaim $85 as a point of support. So you get the breakdown, the rally up, rejection at 85, and I did think about taking a short entry here, but I stayed patient. We get another fall back down, and that for me serves as enough confirmation that MU is not going to reclaim 85, but rather continuously reject it. So on the first rally up that we get, I take my entry short here because I did not want to miss another big flush move down. So I take an initial entry short here with smaller size, and I tell everybody that I'm leaving room to scale in on this trade. That was always my plan for this. That is why I took the entry as early as I did. So the reason why is because I wanted to get some skin in the game in case this sold off, but also leave some room for me to add to the position if it continued to rally back up. And if we're looking at this on the daily chart time frame, remember it's an earnings gap up, right? So all of this down below the low of day on MU is potential profit margin. So if we get this reversal, let me move back to the 1 minute time frame here. If we get this reversal off of this first candle or even this second candle, our profit margin down through the gap area looks like that. I mean, huge profit margin there, while our risk off level is going to be $85. I mentioned to everybody that was my stop. So my stop loss, 85 at the initial entry. Potential profit margin was going to be a fill of that gap, or at least maybe a move down towards, this consolidation in the after hours session from yesterday, which would be around $82. Either way, our potential profit looks like this, while our potential risk looks like that. Okay, so more than double potential profit than risk. We get the move up higher, though. We don't get the flush move down. We get the move higher. And in an effort to manage this trade properly, I scaled in on this candle here. So as we get the rally up, I'm adding to my position in an effort to lower my cost basis. Remember, this is always part of my plan. So there's a big difference between adding to a losing position versus scaling into a trade that you have planned out for yourself. Had this ever reclaimed $85, I would have closed the position out and taken a loss. We get a rally up to 85, the perfect retest. So it makes sense for me here to go ahead and scale in again. So rather than my cost basis being down here or even here after the initial scale in, now all of a sudden my cost basis is somewhere along this flat line. Now this is where the trade gets interesting because we kind of get a little bit skewed on our entry price due to theta. So theta is going to be premium burn of your contracts over time. So initially, we're getting big moves on MU, right? $1, $2 drops here, lots of volatility. After we take our 3 entries, nothing, just consolidation. So as the stock is moving sideways, our premium starts to burn. And this is not good for us. What I didn't want to do during this time frame was continue to add to the position because I didn't want to take on more size. I was already at my point of no return. So your last entry, very important point for you here. Take notes on this if you have to. When you're scaling into a trade, your last entry that you take needs to be your point of no return for the stock. Meaning, if this is my last entry on MU at $85, I will not add to this above 85 because at that point it becomes a losing trade that's not working for me, and I would just be adding to a losing trade rather than following my initial plan of adding up to 85 and then waiting to see what's going to happen. So it is a long period of consolidation that we have to hold through and wait, and then we finally get the ultimate rejection of 85, the move down lower close to the low of day, and we're only offered 10% profit here. The reason why is because of all of this theta burn, right? All of this premium burning during that consolidation really kind of screwed us on the sell. But we're smart about it. We know that low of day is potential point of what? Support, right? Along with this being now the top side of the gap, potential point of support. So we go ahead and secure profits here on the drop down close to the low of day. 10% profits is what I took on, I think it was on this candle actually. 10% profits is what I took on the trade there. We do get a move back up. I'm back down about 10% here, and then we get the move back down, and I just went ahead and closed the remainder out. So I'm scaling out. I closed the remainder out here at break even, and I made the right choice by doing so because MU does bounce off of this price point and continues to push up and is still continuing to push up. So I know that it's a lot of work scaling into a trade, holding through all of this consolidation, seeing a big drop just to only get 10% profit. But that is the way that we were able to manage this position today, and it was the only way, in my opinion, that we would have been able to manage this position. If I had to do anything better, or if I could do anything better for the MU trade, I would not have taken this initial entry down here and instead would have scaled in there and then maybe up here and then again at 85. That way I would have more capital put in at a lower cost basis. So I could have probably got about 15 or 20% on this drop, rather than my 10% that was offered. So that first entry kind of really skewed the results. But at the time, we didn't know if MU was going to heavily drop down into the gap area, right? We could have this thing could have sold off like crazy, and we would have been super happy that we took the initial entry if that was the case. So hindsight here is 2020. I think we did the absolute best that we could for managing this trade given the price action that we were given today. As far as the rest of the watch list, pretty much everything else is a void. Meta did pop, but because I was in the MU trade, I did not take the Meta trade. I really don't like being in 2 positions at the same time, though that was something that I did not to. I think it was yesterday, actually. That was something that I did yesterday. It's tough to do, to manage 2 trades at once, so I decided I was not going to do that today. All right, that's the breakdown of the MU trade. So how to properly scale into a trade. I want you to notice the entry points. I'm not adding to the position during consolidation. Why? That's not really doing a whole lot for my cost basis, right? I'm just adding more size at the same price point that I've already added in at. I'm scaling in at price points that make sense, that lower my cost basis, and I'm taking the profits when they're offered, even though it's only 10%, taking the profits when they're offered at or near the low of day. And one more thing, I have conviction in my trade, following my plan, which is a stop loss at 85. We never get the break of $85. We hold through the entire trade the entire time. Patience here pays, and we take profits rather than, panicking out and taking a loss for no reason. Okay, press that like button for me if you haven't done so already. It is the best way to support this type of work that I do, and subscribe to the YouTube channel if you haven't done so already. I post some pretty good content every now and then, and I don't know anybody that's quite breaking down things like I am. Enjoy your holiday weekend. It's a long weekend coming up. I will see you next week when we continue the $1,000 account challenge. Take care.